and thank you for attending the IPR live webinar, Payments and Remittances Post-COVID. I'm Osama Kasaibati, Associate Sales Director at RemitONE, and will be hosting today's event. We have an hour and a half for today's webinar. For the first hour, I will moderate a panel discussion with our expert panelists. And then there will be 30 minutes at the end for questions from the audience. Please leave your questions via the Q&A button at the bottom of your Zoom screen at any point during the webinar, and we will try to answer as many questions as we can at the end of the session. Before we dive into the panel discussion, just a few words about RemitONE, who we are, and the IPR brand. Our mission at RemitONE is to empower the global money transfer industry with technology and business solutions to provide secure and fair transfers for those who need it most. That's why, in 2018, RemitONE launched Innovation in Payments and Remittances, IPR, to bring together various industry supply chain members to drive positive change. The first IPR event was held at the iconic London landmark, the Shard. This year, due to the pandemic, the event was hosted online, but we still attracted over 2,000 attendees worldwide. Building on this momentum, we're pleased to bring you the IPR report on which this webinar is based. We hope you've had a chance to download and read the report, but if not, then you can still easily get access using the details shown on the screen or on our LinkedIn page. To start off today's session, I'm pleased to introduce our expert panelists. First off, we have Leon Isaacs, founder and CEO of DMA Global. Hi, Isaac. Pleasure to have you here with us.
Great. Hi there, Usama. Great to see you again.
Fantastic. Always a pleasure. We also have Martin Annandale, Global Head of Money Transfer Organizations for MFS Africa. Hi, Martin. It's a pleasure to have you here.
Thanks, Osama. Good to be here. Thanks.
Excellent. Next up, we have Luke Flomo, CRO at Vine Payments. Hello, Luke. Welcome.
Welcome. Welcome all.
Fantastic. Good to have you here with us.
Likewise. Glad to be here.
Next, we have Suki Sirvastan, UK Head of Sales at Azza Finance. Welcome, Suki. We're pleased to have you here with us.
Thanks, Osama. Hi, everybody. Pleasure to be here.
And finally, we have Arif Salim, CTO of RemitONE. Thanks for having me, Salim. Thanks. How are you?
Yeah, we're keeping well, alhamdulillah. And good to be here, and greetings to everyone.
Just before we do get into the question, just a reminder to everyone about the format. So I'll be posing questions to each one of our panelists, but please, if anyone else has anything to add or speak about the subject, feel free to jump in at any point and voice your views. Also, for the attendees, don't forget to leave your any questions as we go along at the bottom of the Q&A screen. Without further ado, let's get into today's panel session. So the first section in the IPR report and today's webinar looks at legacy systems. Since our last survey in 2018, we've seen triple the number of people identify costs as a challenge facing the money transfer industry. The report, we found that aging legacy systems are a big factor and are driving apprehension over costs. So first question, what do you think lies behind the apprehension with cost? And do you think legacy systems have a role to play in this? And that's going off to Leon Isaacs, please.
Hi. Well, great. Thanks for the question. I mean, I think costs have always been a concern to any business since the year dot. But I think in the current environment, there's some clear drivers. I think if we look at the really big picture around remittances, the costs have been going down over the last 10, 12 years, not maybe as fast as some governments and international organizations would like, but they've been going down. So in any environment where the fee that's charged or the total earning from fee and foreign exchange that's charged is going down, you've got to make sure that you keep a really tight control on costs. So I think you've got that as an ongoing situation. Then we've obviously got the impact of COVID, which is sort of linked to digitization as well. We know that a lot of people have moved to use digital services. And part of the rationale for that for the consumer is that they're easier, more convenient and lower cost. But for a number of businesses, actually going digital is an expensive process in itself, particularly if they've had a historically cash-driven and maybe more manual approach. There's a lot of work and cost that needs to go in there. So I think the whole area of systems is particularly important, and it's not free. So you've got to work out how you manage those costs effectively. For the newer entrants who are more digitally enabled, there's still a lot of cost around developing the system and maintaining it, but we should also remember that they don't have the brand loyalty in many cases that some of the longer term remittance companies have. And so the cost of customer acquisition is also a critical element for them. And then I think the other area, if we look overall, whenever you talk to any companies, is the whole costs around regulations and compliance. There's a lot of effort being made by governments, quite rightly, to make sure that we know as much as we can about customers who use the service, but within the, obviously, always the area that there's a balance of the level of information we have against the risk that those customers perform. But either way, companies are having to invest more in meeting compliance standards, which are only going up. So I think if you look at those areas, the cost of digitization, the system costs that are potentially coming there, the overall environment of declining costs, and the regulatory piece. We've got 4 key areas that would keep most business owners up at night. So one can see why costs are important for businesses. And I think, overall, COVID clearly has been a threat to a lot of businesses as to whether they can maintain the level of customer interaction that they had. And if their volumes are going down, but they've got too many fixed costs, that's also going to have a quite significant impact on the future potential for those businesses. So I totally get it, why it's come out so strongly in the survey that you've done. Perhaps I'll stop there. I'm sure the other panelists have even more ideas in this area as well.
Okay, absolutely. And Martin, would you agree with that? Do you have anything to add? What about focusing on the, if we were to say on the legacy system, does it cost a lot? Is that a big challenge? Maybe getting all the data, migrating the data from your old system. I mean, are people worried about the time and maybe the dip in their activity? They're going to need to move over and things like that.
Someone that was directed at me, I just missed. I thought I heard my name.
Sorry, Martin. Yeah, I was just sort of posing the same question to you, but focusing mainly on the legacy systems itself. Is that are people worried about that? Again, moving from one system to another, the downtime involved, the migration of data. Is that one factor?
Yeah, definitely. I think the biggest factor is the risk factor. You mentioned it yourself that there is downtime that you could experience. Now, mostly today we have redundancy systems. We have backup. We have your backup routing. So there's always that factor, but it costs money, it costs time, it costs energy and effort. I think in today's world, there's enough partners and companies where you can go and hold hands, partner with a company who can help you step for step, in this migration process. I also think that, to Leon's point, you get a lot of companies who have been playing in cash business, and to migrate to digital is costly for them, where the guy that started, or the company that started in the digital space definitely has a lot easier, especially since the start of the pandemic. But again, I'll sort of repeat my previous point, is there's enough partners out there where you could go and hold hands with, who could take you through that migration step and actually do that for you on your behalf a lot cheaper, a lot easier, and have done it before.
Fantastic. Thank you for that input, Martin. Very valuable.
Something I wanted to add very quickly to that
please, absolutely.
Conversation is, I think my personal opinion is it's a balancing act, right? You're always going to have costs associated with making transformations within an organization. But if you don't do it, there's an opportunity cost of not doing so, right? And missing out on the opportunity of servicing a wider addressable market across multiple territories. For example, if you're not global today, digitalization has definitely made the world smaller. So I think there's a huge amount of opportunity cost if you don't sort of take the plunge now, and that will be greater the longer you leave it.
No, I think you're absolutely right. Me as a salesperson, a lot of the conversation that I'm having with clients or prospects speaking to me is that we want to start offering mobile payments, or we want to start offering other services on our platform. Our old system can't do it, but I know I have to sort of take that plunge in order for me to then be able to grow and offer those services, right? So you're absolutely right. It's they're faced with these challenges and they have to make a sort of decision, and again take that plunge. And do I invest with a particular partner, and which partner do I go for? And again, really having a partner that can also evolve with you. So it's not going to be scalability is one issue as well with a lot of the legacy systems. Again, speaking about restrictions with that and why people want to move forward. It's not just the type of transfers, the volume of transfers that the systems can handle and things like that. And again, if a new if a new regulation would come out, again, it's for them to try to manage that. If they're working with a partner who sort of covers that, it kind of speeds up and makes the process a little bit less painful, and again, more cost effective. But no, absolutely, thank you for that information. So moving on, I'm going to pose this question to Arif initially. What advice would you give MSPs facing these challenges, Arif?
Just to reiterate, strongly agree with the points that Leon's raised, Martin and Luke as well. But maybe from the perspective of from a technical perspective, when you're trying to manage the risk of migrating systems and also the cost of doing so, one thing is to maybe break down the area in which the particular systems are being developed or advanced. So you could think of front-end systems, with digitization going on and many more traditional MTOs trying to move into the digital space. There's the front end, right? The mobile apps, the online presence, whatever. So maybe you could start with modernizing those parts of the systems that are being used and not the back end. Or it could be the other way around. And maybe it's the partners that you're trying to integrate with. Integration is a big cost, especially players who want to send transactions to many different countries with many different partners. So one option there is to make use of aggregators, for example, right, to widen the payout network. Or from the angle of compliance, you could look into adding additional compliance systems that feed that are fed data from the primary system, and in that way you're able to add in additional robustness on the compliance side without altering the entire system in one go. So the idea of maybe breaking down the migration to newer systems into separate parts, that's one way that MTOs could approach this problem and make it more manageable. Osama, you're muted.
Thanks for that. Does anyone have anything to add on that particular point? Again, I'll just sort of refresh your memory on what advice would you give to MSPs facing these challenges? Does anybody have any other advice they would give to the MSPs out there?
Hi, Osama. I'd like to add something there. So I think Arif brought up a great point when he touched on the topic of aggregators. There are several aggregators there who can give you a wide network and access to many, many markets with one integration, right? So Aza Finance has an integration where you can do a single one-time integration, get access to many markets, get access to many, many networks, different payout methods. And I think that is a really resounding point, because when you tie in your first question, which had to do with cost, and then you tie in what advice you would give, if cost is such a big concern, one of the primary pieces of advice we would give to MSPs and MTOs is find an aggregator who can give you a wide range, give you a wide network, and that way you get more ROI with the work that you put in.
Absolutely. So in essence, what you're saying is, rather than me going through the rigmarole, going through the headache of being compliant with several different countries, having a footprint in several different countries, I can connect with a partner, trust yourself, Aza, you're a specialist in that region, you comply to all the regulations, and you already have a footprint in the network there. With that one integration, of course, I have one agreement with you as well. I can cover several networks, and again, I think you're absolutely right. It does definitely bring down the cost in it, and it helps finding that right partner as well as a finance with that good reach and again with those good connections.
Absolutely.
Excellent. Does anyone have anything else to add on that point before I move on to the next question? Okay, fantastic. So the next part of the session, we're going to move on to the effect of the pandemic on cash transactions. In the report, we found a trend away from cash, but we believe it's going to be with us for a long time yet. For example, almost 60% of global consumers still prefer to have cash option going forward. That being said, we must all plan for the future and long-term trend away from cash. So next question, and this is going to be for yourself, Suki. So how can the remittance industry, as it goes digital, save the role of the traditional agents? Are there solutions out there whereby the agents can still play an active role?
Thank you, Osama. So I'm going to break your question down, I think, into two main parts to make it easy to answer. Firstly, will the role of agents completely go away as the remittance industry goes digital? And the second part, assuming we're in a fully digital world, how do traditional agents fit in? So anyway, to answer your first the first question. The long-term trend away from cash is evident. And like you said, Osama, we are moving towards that, right? It is still going to be many, many years and many cycles before we get to any semblance of, the end of cash. I think governments would have to intervene. They would have to restrict or ban cash, which isn't likely to happen, right? Cash is still very much used in a lot of markets, especially in frontier markets. And agents will still be needed for cash in, cash out services, which is still here to stay for many years to come. Even if remittances were digital on one end, so let's say on the acquiring end, if I was sending money to somebody in a frontier market and it was digital on this end, it could still mean that cash is needed to be received on the other end and agents are needed for that. At Aza Finance, for example, all our integrations with all our telco partners in frontier markets, their mobile network still has agents in case the recipient needs to get cash out. Now, having said that, right, the second piece, which is let's assume we're in a fully digital world where the traditional role of agents is now being questioned. I think agents can still play a very critical role. When you think of like mobile apps and payments, they can definitely include agents in some role and capacity. So if you think about KYC checks, right? Some KYC checks can't happen fully online. There are those corner cases and there are those occasions where KYC checks have to happen in person. Somebody has to take their ID and somebody has to be verified by a physical agent. The other important piece where agents come in a fully digital world is user acquisition. So agents can be used to target user acquisition into the digital channels. So agents can always be incentivized to onboard users onto the digital platforms. You always need somebody to influence users to come and adopt the digital platform, and agents can be paid for it. So I think that even in a fully digital world with mobile apps and payments, agents can still play a big role in financial inclusion, especially in frontier markets where there's a large population who is essentially unbanked. And even if you think about domestic remittances or domestic payments, if you aren't receiving international remittances, you still need to go to an agent. Let's say there's no bank branch, you still need to go to an agent to cash in, give them money to put into your wallet so you could use it. So yeah, those are my thoughts on the question around what sort of role agents would play. Again, to wrap it up, it would still be a long time to come before agents are completely out of the picture. And even if we were in a fully digital world, I think there are definitely roles and capacities that agents could give us benefits.
Yeah, I mean, you're absolutely right. What's quite interesting to see is that how some countries have definitely embraced it more than others. I know some of the Nordic countries. I mean, they are really pushing towards going cashless and digital in a big way. I mean, some of them are getting chip implants where again they hold all their details, all their bank details, and they can have keys on it and things like that. And so it's again, it's quite interesting to see how different countries and their relationship with technology and how it pushes it along.
Listen, I couldn't agree more. I remember my first time in Stockholm. I think I took out £100 worth of GBP and transferred it into SEK, and I didn't spend one cent of my SEK, and had to take it all back and convert it back into GBP. So yeah, cashless society definitely in the Nordics is already there, I'd say, to a certain extent.
Yeah, absolutely. I think we can sort of take a leaf out of their page sometime. I know some people are not, and I'm sure Arif might have his sort of conflicting opinion on this, but some people embrace sort of technology, but again, it does open up a whole load of other issues and in terms of data protection and being individual and things like that. But it's definitely an interesting point there.
Yeah.
Hi, Leon.
No, sorry, it was Martin. Leon,
Martin,
did you want to? Yeah.
Yeah,
I think you know, from our perspective, it's all about, you know, and to Suki's point, you still need a place to cash in, cash out. One of the markets, the send or the receive market. It's all about finding a different position for the agents. And you know, at MFS Africa, what we've actually done recently is we've acquired an agent network. And for us, who's always been a digital company, we are now we've actually gone into the agent space. And why would we do that? You know, and it's all about repositioning the agent and repurposing them to cater for the digital business, maybe on the other side. So I'll keep it short and sweet, but that is essentially what we are focused at. And I think, you know, agents still have a big role to play. If I speak to some of our MTOs who are very cash focused, a year and a half into the pandemic, they said that yes, cash business has reduced its contribution to volumes and revenues, but digital has still not got the majority share, not even close. So it is going to be very, very long time before, you know, cash completely disappears, and the agent is needed for the cash.
And when we speak about agents, even when we are sort of speaking digital, so wouldn't the agents be promoting that particular app? So they'll go in and speak to some of their clients, probably, or some of the people who are using the traditional way, promote the app. They'll get commission for that, or even again show them how to download the app. I know there are some really remote places and camps as well that they go to where there are offline options out there. So again, it's still sort of semi-digital, but not because it's offline. Again, reaching the community where there's sort of not a lot of internet access. There's not sort of not easily for them to go to a particular agent and pay the money over the counter itself. So it's quite interesting, the different sort of technologies and things we have out there starting to creep out to tackle these issues.
Yeah, and you're going to have
just.
Sorry, go on, Liam.
Sorry, Luke. Yeah, no, I was just going to come in and say, I think also we need to be clear that many of these agents are not exclusively offering money transfer products. They are locations that are offering a variety of products and services. And in the past, remittances may have been quite a big contributor to their turnovers, but they've always, you know, apart from a few, they've nearly always offered, whether it's local other telephony products or it's, you know, their convenience stores or whatever. So what we're talking about here is a place that potential customers are coming to for a variety of things. And I imagine the actual products that these agents are selling or offering from money transfer companies may be slightly different, but they're still going to be offering those products. These agents are looking for all sorts of revenue streams. So I think, you know, what we're really saying is there may be less of them in the future that are focused on remittance products, but there will still be some. They will still exist as physical places for people to go and get something. And it's just what they really bring in many cases is the cultural attachment to the person who's sending or receiving remittances, and the ability to engage and put a personal face. And they'll always do that. How they get recompensed may change though. And I totally take Suki's point. There's a difference between getting paid on a per transaction basis than perhaps acquiring a customer and providing identity services and those types of things. So I think it's a really interesting discussion, and the role will change, but there will always be agents in the process somewhere. Sorry, Luke.
No problems at all, Leon. I was just going to literally talk to the cash piece, really. And I think Suki and all of the panelists have touched upon this, is that, you know, cash is not going away, right? It's still going to be there. And I think the key thing for any person who wants to provide a service to a consumer today is about providing an ability for that consumer to utilize that service and consume that service in the most easy way possible, so with little friction as possible. And offering that consumer choice, right? Because everybody has a slightly different idea as to what their perfect world might look like. And that perfect world looks very different based on the territory operating in, the infrastructure that operates within that territory. So, you know, Sweden, as we mentioned earlier, becoming cashless, but other places in the world, you know, are nowhere near becoming cashless. So it's all about that flexibility and being agile and having a solution that means that you can address the widest addressable market possible. To drive that ROI and
Luke, I actually want to stay with you on this question, Luke, and I want you to expand a little bit. And so this question is actually posed to you. How can MTOs get maximum value from digital transaction, which compared to cash can be expensive to process and trend towards smaller values?
Again, to that point, right, to a certain extent, it's all about what does the consumer want? How do they want to utilize your service? And I think, you know, there'll definitely be some consumers out there that will continue to want to go to an agent, you know, distribute cash to somebody in a completely different jurisdiction to them, and that's not a problem. And I think, you know, that's hence why agents will still be able to offer the services they do from a transactional perspective today, as well as all the other additional services they provide consumers. But I think, you know, the world is changing, especially Generation Zs and Millennials. You know, they are very much used to this bit of kit that everybody carries around. You know, typically, I've got 3 boys. They're on their mobile devices constantly, and so therefore we need to bear in mind that there is a transition from cash to non-digital environments to digitalization, and therefore you need to offer the consumers the ability to pay you in the same way, right, in a digital format. And if I take, you know, remittance companies typically have used things like cash, manual bank transfer to allow consumers to push funds around the world. You know, open banking is definitely helping, supporting agents, organizations who are doing that, because they're making it less frictionless. So, you know, if you think about a manual bank transfer today, I have to go and take a bank information, come out of the environment that I'm in. So I'm already leaving the user journey of that retailer or that agent. And then having to go into my bank, input that information in a manual format. You know, that's friction. That friction creates cart abandonment and means that I might then take the opportunity to go and double check that I've got the best currency spot rate, for example, before I make that trade. So it's all about creating that environment that reduces friction, enables the consumer to, stay within your user journey. So you're, essentially creating an ability to drive conversion and adaptation and customer acquisition, but also you're negating things like fraud risk. So if you think about open banking as a technology, which is what we do at Vine, we support the ability for consumers to pay via their bank app. It means that I can use my biometric authentication, just like digital wallets, but push the monies and the funds directly from my bank account to an agent or a facilitator to then push those monies to the recipient on the other side of the world. And it means we can do that in a really seamless way. And I think, if you look at the IPR report, some of the key trends where, fraud risk is increasing. So, using biometrics and the ability to negate that fraud risk and verify a consumer really easily is really important. Costs associated to legacy platforms, legacy infrastructure that being the likes of manual bank transfer, traditional payment methods like debit and credit cards, whereby you have scheme fees, you have interchange, you have fraud management systems, all that cost money and take margin from your P&L. We at Vine are trying to utilize open banking networks and the direct connectivity to the banks to negate a lot of that friction, but also a lot of that cost and that pain for both a consumer and an agent and an organization that wants to help consumers to distribute monies across the world. So I don't know if that answers your question in its entirety, but yeah.
No, absolutely spot on. Yeah, no, definitely. That's very, very useful information. Would you also say that, so if you move away from the remittance payment itself, do you think by offering, and again, it would be more difficult to do this through an agent, but offering more services, it makes the offer towards or makes client retention higher? For example, so you'd go to an app, you'd have the option not just to only maybe make a remittance payment, but I might have a little e-wallet on there. I might be able to make a bill payment. I might be able to do a top-up card or something of that nature. Do you think that has also haven't had an effect while people might be driving towards more the digital side?
Definitely. If we're talking to a number of very large organizations and institutions about how they can use the digitalization of the world and open banking in particular to allow them to provide account information and verification services, for example. So, if I'm a consumer today and I want to do remittance, I have to load up my passport or a copy of my driver license and such forth. Whereas actually we can extrapolate a lot of that information from the bank that allows you to identify that individual, name, bank account details, address, and such forth. That means that you can negate a lot of that friction. But also it means that you can offer the opportunity to provide a whole host of different services that the consumer can benefit from one user journey and one user experience. And you're seeing it across multiple. You look at Apple, for example. Apple started off just making laptops. Now, literally, they're a payment institution, as well as providing mobile phones, as well as providing all this other holistic infrastructure. So, digitalization definitely, like I said earlier, makes the world smaller and gives a huge amount of opportunity for any organization to tap into new markets, new industries, new opportunities to earn revenue and drive P&L. And I think anybody that takes that opportunity and pushes it now will succeed. Anybody that rests on their laurels will probably get left behind.
Absolutely fantastic. Thank you for that input. I'm going to move on to the next segment. It's mobile payments and wallet payouts. So kind of rolling on from that.
Do you mind if I just add a comment just on the last topic just before we go on?
Absolutely. Yeah, sure. Go ahead.
Yeah, so the first is a comment, and then the second is maybe just to address a question that was on the chat. So one of the things about cash and then moving to the sort of new digital model is that traditionally with cash transactions in the remittance space, they're normally higher value. And that means that the fees associated with them are normally higher as well. And customers are usually okay with that. But as we move to the digital model, we find that the value of the transactions tends to go down, but the frequency might go up. But also the expected fee needs to be less. People expect to pay less as well. So this is just part of one of the things that MTOs have to consider and understand about the move from cash to digital payment methods, in that they're probably looking at smaller transaction sizes, but more of them, but lower fees associated with them. So that's just one comment.
Yeah, and Tatifa, and that's just quickly to touch upon that very quickly. I think it's really super important, therefore, that you find a payment method that gives you the best cost structure, right?
Yes. And so traditional payment gateways, which charge a percentage, of the amount being transferred, starts to look very difficult in this sort of newer world. Whereas, the way that the sort of flat fee open banking charges is a much more sustainable way of operating, and it's a much lower fee as well. That's right. Yeah.
It also means that you understand your cost structure of a customer acquisition, where it's very difficult to run an ad valorem percentage basis, right? Because you're not too sure when that consumer first comes to you how much they're going to be transferring, where they're going to be transferring it. So if you know it's a fixed cost, you know that every transaction that you initiate will be the same cost structure. It makes planning and forecasting a lot easier.
Yeah, that's true. So just going on to a question on the chat. So Rayaf was asking about the crisis of agents. It seems to be linked to the fact that people are paying cash and it's becoming harder to handle that cash. And, you know, banks don't want to really work with MTOs who are depositing large amounts of cash every day. So how can agents play a role in a world like that? So again, there's no straightforward answer to that. But one of the things I would comment on is that many customers have a relationship with the agent that they go to, send their money from. And in a sense, then those agents, they have a sense of ownership of those customers, right? They brought those customers to the MTO. The trust relationship exists with them. So involving agents in the newer digital model is advantageous from that perspective. Retaining them is advantageous because they have the relationship with the customer. And, typically in the digital world, customers are as fickle as can be, right? Okay, I spent 10 seconds too long on this app, bin that, I'll try another one. That's the mentality. So maintaining that trust and that link with the customers is important. And so if agents can be involved with that, even if the payments are being done digitally, then that's something that probably has value in it. So trying to maintain your agent networks, even if customers are paying digitally, is something that can be explored, and systems can provide technical solutions for that. So that's just in response to the question on the chat.
Thank you so much for that. So next section, we're going to move on to the payments and wallet payouts. The IPR report looks at the increase in mobile payments as a result of COVID-19. In the last year, we've seen a 400% increase in mobile transactions within the RemitONE system compared with the year before. Research has also found that in 2020, mobile payments around the world surpassed cash for the first time. And this one's going out to Martin. So what is driving this uptake? Why do people prefer mobile payments and sending to e-wallets over cash collection, for example?
Thanks for the question, Osama. I think the first thing that everybody sort of gets is that people's, got scared of touching cash. Cash became something which is a risk. That's the first part. The second part is that in these hard lockdowns around the world, people were forced to find alternative ways. They were still earning income in let's say, the US or the UK, and needed to still keep remitting school fees or whatever it might be back into developing world or into, let's call it, Uganda. And they were forced to find a different way. Now, in doing this and finding an alternative way, because you just had to, they found it easier and more convenient. But not only that, they probably found it cheaper as well at a lot less effort. There are no business hours. It's real time, instant. There's no energy or effort required to get to an agent. There's no lines to wait in. So I think this has that's probably the biggest reason why we've moved from a sort of a cash to a mobile delivery, or what we've seen as a trend. But I think another thing that to consider here is that the adoption of mobile money, or let me call it the rapid adoption of mobile money, the steep increase in customer acquisition of mobile wallets, has really been a contributing factor to digital remittances. If we look at Tanzania, Kenya, Uganda today, Ghana, and many other markets as well, you see that more than half their populations, a lot more in some of these markets, are mobile money penetrated, meaning they've got one or two mobile money wallets.
A lot of these guys, otherwise they're unbanked completely, otherwise, aren't they?
Exactly.
Yeah, exactly. Yeah. And opening a mobile money wallet, it costs you nothing. It maybe takes you 10 minutes. Nowadays, in places like Tanzania, it's biometric, right? You don't need to fill in forms anymore. It gets filled in on your behalf, and a picture gets taken of you from the agent's phone. And this is where we are today. 5 years ago, that it was as small as possible leaflet that ran down about 1.5 meters that you had to complete all your details. So they've really done well, the mobile network operators, to sort of reduce the friction of opening up a mobile money account. They've also done things like once you've activated your SIM card to call and to SMS and to store data, a mobile money account gets activated automatically for you. So there's no second step required. And that adoption has really driven digital payments as well. And it only takes one digital payment that gets delivered in 1, 2, 3, 4, 5, 6 seconds, until a send and a receive are hooked. And that's what they'll be using going forward. Yeah, I'd like to see what anybody else would add.
Yeah, I'll add a couple of points here. So Martin, thank you. I think you raised some great points, especially in saying that a lot of the frontier markets that you mentioned, Ghana, Kenya, are mobile wallet driven. Maybe I'll share like a personal experience, right? When COVID hit, I was looking to buy groceries and didn't want to go in store, right? So again, a massive behavior change, right? I had to now think about an online grocery app. So I looked at like my grocery store that had an online website, went in there, tried to buy groceries, got stuck. Because this grocery store has a lot of branches. It's everywhere in the UK, everywhere in London, but they never had an online presence because they just never needed to really have that. And then I switched and went to an e-commerce grocery app, and boom, I was able to buy my groceries and able to get everything delivered next day. So clearly the trend, was very evident to this e-commerce grocery app who already had like the whole supply chain, everything figured out. And it was much easier to go online and make this purchase. But having said that, just getting back to Martin's points, mobile payments are defined as instant, right? You send money to somebody and they're able to get it into their mobile wallet instantly. And they're able to use that money to pay for a coffee or a meal. So, we have integrations with lots of mobile telcos in frontier markets where we have the interoperability to pay into those wallets. The recipient receives the money, and then they're essentially able to pay for goods and services. So I think the drive towards mobile payments is helping the overall financial inclusion of those who are unbanked as well. And it really helps in like remote areas in some of these frontier markets where people don't have access to branches and need to essentially like walk many, many miles to go get their money. Now they're able to get that into their mobile wallets. It's also more cost effective, as Martin pointed out. It's more cost effective for the MTO as well, because the maintenance cost of mobile money systems versus cash systems tends to be lower in the long run. And that cost savings can be passed on to your users. So I think like there's lots of factors at play here of why that drive is going towards mobile wallet. We've talked about cost, talked about the concept of instant payments, talked about convenience, and also with COVID, hygiene was a huge reason, which Martin, you also brought up. People didn't want to touch cash.
Absolutely, thank you so much for that. So just to highlight those 2 points. First one, obviously the COVID pandemic, social distancing, really driving people away from again that physical contact with the money or contact with people. And secondly, the real big uptick in again the unbanked, for making it really more easier for the communities in those countries to have access to those facilities. So thank you very much for that.
So I think Charlie raised an interesting point on the chat. If I could maybe quickly speak to that. He said basically that, in some Southeast Asian markets, it's difficult for migrants to open bank accounts. And what mobile money players have done is they've been able to include mobile payments as an option for payroll. And his third point is that the e-wallets, connect to debit cards where the migrants can withdraw money, or where there's card acceptance, they are able to shop. This is interesting. When in 2017-18 in Tanzania, there was the same sort of functionality was provided, where employees could get salaries paid out partially or fully into mobile money wallets. Obviously, there's the limits that always come into play. And what was interesting is that we saw a huge adoption at that time from payroll. And when I think the GSMA did the study in 2019, but they reckoned, or it was actually, I think it was the GSMA, but it was about 1% of all, let's call it cash in or incoming funds was digital. 99% was still cash in worldwide, physical cash. So very interesting. This is a trend I would wonder and love to see where that trend is today. 1% digital cash in. Maybe today we're sitting at 20, 30%, hopefully more. Just an interesting point that Charlie brought up.
Yeah, and just to touch upon that, Martin, I think it makes sense, right, for an MTO to be able to load up an e-wallet. But the pain point is getting funds in from an e-wallet, right? Because to your point, they're typically linked to some form of card. So you've not only got the card fees, but you've also got the fees on top for that e-wallet typically charges, and that can be quite extreme in some circumstances. And I think you've also got reconciliation processes. There's a whole host of things to think about from a recipient perspective. But I think when you're distributing the funds to a receiver on the other side of the world, it definitely makes sense to be able to do that to an e-wallet. Especially in, if you look at the likes of Russia, again, you've got Kiwi, WebMoney, Yandex, all these e-wallets that essentially allow that consumer to store those funds and then utilize them across the ecosystem.
Yeah, Luke, and I think, Luke, you bring up a good point, which is educating the MTOs as well, right? Like that's something that's really important. The MTOs need to know which markets are cash driven, which markets are wallet driven. And, wallets may be instant and it may work really well in some markets because that is the main thing people are using. But in other markets like Egypt and Morocco, it's very cash driven. So it's about educating the MTO and saying, okay, you know what, everybody uses cash in this market. And, for you to integrate cash remittances makes absolute sense.
Sorry to stop there, Suki, because actually this kind of rolls on to the question which I wanted to pose to Leon. Leon, which are the areas? I know Suki just started to touch upon it there. Which are the areas would you say are the biggest uptake in mobile payments, Leon? Which regions? What are the most opportunities being had?
I'll come off mute. I think this is a really interesting discussion here. And I think just picking up on Suki's point there, one of the key drivers, well, probably two key drivers around this phenomenal uptake of mobile, or what we believe to be phenomenal. Like to see some data soon. But one is just that more markets have a better environment to be able to actually handle mobile payments than they used to. And part of a key driver for that has actually been COVID, because the regulators have really understood in parts of the world the real benefits that mobile payments can bring, for all the reasons we heard, the hygiene factors and everything. And so they've actually taken steps to make it easier. So I think, if you look at it, people will use mobile payments for cross-border payments normally after they're using them for their everyday transactions in their day-to-day business. People probably make a mobile payment across border maybe 1, 2, or 3 times a month. And we hear that's picking up because the mobile payments has encouraged people to make more. But if you compare that to the number of domestic transfers, it's still a very small proportion. So I think for all the reasons we've heard about the advantages, creating the environment to enable mobile payments is the key enabler, which it's a long way of getting to the answer to the question you asked, which is to say that, of course, we've seen that historically Africa has been the main driver of this, from both a sending and a receiving part, and particularly for intra-Africa transactions. So and that's partially because the other options were so limited, and mobile was able to actually create a very simple solution or easy to understand solution for users. So Africa is accounting for nearly half of all mobile remittance payments. But what we're seeing is, as Charlie said on the chat and others, is that we're seeing it picking up in parts of Asia as well. And I think a lot depends on what was already there or what is there. So in Asia, there seems to be more wallet-based transaction, or certainly account-based transactions in Asia, because a number of financial institutions have reached out to customers there. But you've also got things like, I think is alluded to here, the wage protection system in the Middle East that is enabling and encouraging worker payments, salary payments, to be put directly onto a wallet and then transferred over. I think the other point we just need to look at is just to distinguish between when we talk about a mobile to mobile payment, on the sending side, it's particularly if it's from a developed country, it's almost certain that the initiation and the transaction process might take place on a mobile wallet, but that's probably linked to somebody's bank account in most cases, one way or another, for the payment side. On the receiving side, it's almost certainly linked to a wallet, which has probably got no connection to a bank account. So we've got that dichotomy, but we still see Africa being a long way ahead of the other regions, Asia catching up, not much evidence, a little bit in Latin America and the Caribbean. So we're seeing a lot of differences, and one would hope that actually those regions where mobile money is an important solution, but they're not offering it, can learn from other parts of the world that are already doing it, so we can get everybody up in this area. I'll stop there.
No, actually, I want to probe you a little bit more on that. Actually, earlier when you say Asia, because I know it's quite broad, isn't it? I mean, do we have e-wallets upticking in sort of the Indian subcontinent? Are we seeing in Southeast Asia? I know China, they have particular rules and regulations up there. Is that a no-no up there? I know they have issues with cryptocurrencies, things like that. Where are we seeing sort of the bloom in that area?
Well, I think it sort of depends, because you've got Asia, of course, is another one of those markets that is, it's the biggest receive market for remittances, but it's also quite a big send market as well. And a lot is driven by receive country policies, procedures, and environment. So we're seeing, in India with the massive number of bank accounts, we're still seeing a big uptick in the mobile payment side, but it's actually much more in some more developing countries in Asia where we're seeing it, and Nepal's and some of those. In fact, before the situation arose, I don't know how to describe it politically, politically correctly, in Myanmar, for instance, then credit to mobile wallets was growing fantastically. Of course, with the current situation, that's slowed down. But what we're seeing is mobile in particular is tending to really take off in places where perhaps the conditions are the hardest. And those parts of Asia where banks were maybe stronger, or there were much more developed systems, is probably more bank type of accounts. But what you're also seeing is obviously a blending of those as well. So if you take Pakistan, for instance, under the Pakistan Remittances Initiative, people open accounts with banks, but now Pakistan has quite an advanced digital payments system. So then they're using that to then access their money via their mobile. So, one of the challenges we have, I think, going forward is to make sure we get our terminology right, so we're all saying the same things. But so I'm not sure if that answers your question, but hopefully gives a bit of color anyway.
Yeah, just to elaborate very slightly on that, I think you've nailed it, to be honest with you, Leon. And I think Suki mentioned some really interesting pieces earlier in terms of, for me, it's all about the infrastructure that's available in those territories. If you look at India, you've got Paytm. If you look at the likes of Kenya, obviously you had M-Pesa. These e-wallets have been created because there's no infrastructure there. There's too many people, unbanked, that don't have the ability to get a bank account, or, again, to Suki's point, have to travel miles and miles to get to a bank to be able to withdraw cash or utilize those services that otherwise would be utilized via a banking infrastructure. So, these e-wallets have essentially created that ability for those consumers to have a very similar type of standard of living to what we've been used to for many years. And I think that they'll continue to grow and evolve whilst there's not anything else supporting those consumers on that journey, to having the ability to go and buy services and products when and as they wish.
Absolutely, I totally agree with you in terms of that playing quite a large factor.
So just one last point, if I could, from my side. So a lot's been said about the payout, and rightly so, because I think that's where the majority of the growth is. I just want to add a small point about the sending side, that the increase in the use of the mobile platforms on the sending side is also linked to eKYC. So it's a lot easier today to onboard a customer on mobile platforms. We're talking about the sending side, right? Because of eKYC and the the increased accuracy, the reduction of fraud, and so on. So that's also contributed to the rise of mobile on the sending side, right? Just wanted to add that point.
Yeah, and if I could maybe add to your point, Arif, I think what we've seen, our name's MFS Africa, so we play in the African space, and a lot of it is regional remittances in Francophone, in East Africa. And one thing that we've seen is, as much as mobile or smartphone penetration is trying to sneak, or creep rather up to like 20% in a lot of markets, it is creeping fast. And I'm talking about maybe 2 years back figures in maybe just 2 or 3 markets. But as smartphone penetration is rising, and these mobile players are creating, very smooth, easy to use mobile apps, customers are getting a lot more comfortable with using that. It's just easier to use. It's more comfortable for them. It's just, they feel a lot more secure in using it. Yes, they are used to the USSD session, but USSD has been flawed with a lot of issues for a lot of mobile operators. And I think that's driving their level of comfort to make them do more transactions and actually try it for the first time. That's what we've seen. I take Safaricom as an example. When they launched their global app, there was just a spike in transactions because of, sort of the right time for app meeting the right smartphone penetration in Kenya.
Yeah.
And I think, thank you so much for that, Martin, because that actually rolls on to my next question, I'm going to direct initially at Arif. So again, Arif, just as a reminder, mobile payments and e-wallet payouts, there's been an uptick, 400% increase in mobile transactions. How do I get in on the action? So me as an MTO, I might be doing it traditionally. What can I do to really take a piece of that market share, get a slice of the action?
So this really actually touches on the point that we discussed earlier on, the point of trying to make use of aggregators. So if you're trying to send to multiple wallets with different telcos in different countries, you're talking about a lot of integrations with a lot of systems, and that takes a lot of time and it costs a lot, and there could be a lot of operational hurdles as well in trying to manage all of that. So definitely one of the easier ways to do that is to make use of payout aggregators who have already integrated with those telcos and already have the payout mechanisms in place. Yeah, that's definitely the easiest way to do that.
And Suki, would you agree? Speak a little bit about I know you yourself as well touched upon, as a financer yourself, as aggregators, and have a network. Could you sort of again elaborate on that, or maybe partners that you might be using in areas that you want to reach out to?
Yeah, I think the main benefit here, right, of using aggregators like Aza Finance, of course, the obvious benefits are single integration, cost reduction, one integration giving you many markets and access to many payment methods. But the things that are not so obvious are you will get education, you will get consultation on markets. What is happening in that local market? Is it cash driven? Is it wallet driven? Is it highly banked? So you get a lot of other benefits that come from working with an aggregator who has experience in these markets, and you get some of the local knowledge, right? For Aza Finance, we have local entities and a local structure in most of the markets and the frontier markets that we operate in. So we have a very, very good understanding of what it takes, what the regulations are like, what it's like on the ground. You know, we have staff there, we have people that work in that market. So I think there's lots of other benefits that don't necessarily seem really obvious to the MTO, but those are the education you get, the consultation you get, and really like the consultative approach you get from an aggregator.
And Luke, just moving on to your same question, really, how would you get in the action?
I've not really got a huge amount to add, really. I think, like I say, it's for me, it's just making sure that you do your due diligence, you understand the markets and territories you're operating in, you understand what a consumer demand looks like in terms of, you know, those specific features and benefits and payment types and choices that you need to give them in order to drive conversion and make sure that you're the best in the market compared to any other competition that's out there. If you can do that, then you'll stay ahead of them. If not, then to the point Arif made earlier, I think consumers, unfortunately, these days are fairly fickle, and it's very easy for them to transition from one provider to another without a huge amount of friction, and therefore then they will do so. And we're seeing it across, you know, multiple industries in that regard. So I think, yeah, it's really a case of just making sure that you understand what you need to do to deliver the best operating model that's going to service your clients in the most optimal way, and make sure that they don't get a leaky bucket, so to speak.
Absolutely, I'll totally agree with that. We're on to our final part of today's session, and it's going to be the internationalization of digital payments. Finally, the IPR report turns to an international view. We found that cross-border payments are booming, and it's a huge market, and this creates lots of opportunities in meeting demand for KYC, CFT, and AML compliance solutions. So my question is to Director Suki to start off with. What is going to happen with the technologies like cryptocurrencies and blockchain? What's their role at the moment in the remittance process?
Thanks, Osama. So your question is around what new technologies can be introduced to the remittance process, and then focusing more on cryptocurrencies and blockchain. Okay, so I'll answer that by breaking it up into three main buckets, which I know is a large generalization, but in the interest of time. So the first area is a remitter sending money, so the sender that's sending money. The second is recipient collecting the money when it comes to remittances. And then the third area is the MTO or the payment provider in between using crypto and blockchain to send money cross-border. Let me first highlight the first couple of areas, which is remitter sending money, recipient receiving money. I think when it comes to sending and receiving money, there's probably a really long way to go for crypto, in the sense that I think mass adoption hasn't quite hit its peak yet. Of course, we see a lot of remittance companies utilizing crypto to pay in or pay out. So I definitely think that trend is starting, but I think in terms of like mass adoption and every MTO being able to offer crypto on their app as a pay-in method or payout method, it's going to take some time. In terms of MTOs using crypto to send money cross-border, you would start to think about like wholesale B2B, right? I think the advantages here are it would make wholesale B2B transactions faster and more competitive in price, and overall bring the lower pricing back to users, right? So if an MTO was able to get cheaper, faster pricing, or cheaper pricing, faster settlement, they can bring that pricing back to their users. It also heavily reduces working capital needs, because there would be a less need and a less reliance for credit lines, which a lot of these MTOs are looking for, right? They need credit lines to be able to keep the working capital flowing through the business. With crypto settling instantly and settling cross-border instantly, it really reduces that need for a credit line. So I think that's a big part of the decision when an MTO is choosing a provider. So all in all, I think it definitely has its place. I do think that on the send and receive side for a user, it's going to take some time before we see mass adoption. Of course, there are players doing it today. But I think on the wholesale B2B side, it's definitely like an innovation and something that a lot of MTOs can start to look into and consider.
Yeah, can I just add something very quickly there?
Oh, please go ahead.
I think, I personally think it's definitely got a place in the world at some point in time. I think my only concern with it, if you compare it to open banking, as Suki was saying, in terms of that instantaneous gratification and getting the ability to reduce working capital, my only concern with crypto is the volatility around the crypto market right now, and the ability for me to send money to an end user and knowing exactly what money is going to end up at that end user's bank account or e-wallet or wherever I'm sending the funds to. Today is quite important. If I look at MTOs, they obviously give me a spot rate. They tell me exactly what amount of money I'm going to be converted and what amount of money is going to be received. When you're sending crypto, that becomes very difficult because of the volatility that's essentially around in that current market. So I think as it starts to mature more and the volatility starts to become a plateau out essentially, and we have steadier trends, I think it'll make much more sense for MTOs and the likes to use it as a way of moving money across the globe. But yeah, at the minute, I don't know. Personally, I see it as quite a fairly big risk in many respects.
I think Luke, that's referring to the first two segments that Sophie mentioned. When either the customer's paying or the beneficiary is receiving.
Exactly.
But for the MTOs doing the cross-border wholesale payment, that actually works out quite well. I think that's the way I see it. But yeah.
Yeah, I was to your point, I was referring to the first two.
Yeah, it's the first two. Yeah, that's right. Yeah, and in fact, even when we talk about the actual cross-border payment, so traditionally, what MTOs will do is they'll collect together a few, like 10,000 transactions over the course of the day or whatever, and then they'll make a single bulk payment to their correspondent bank in another country. But if you're able to do spot transactions with crypto and settle instantly, then it opens up the possibility of doing that for each and every transaction individually. Why not? So it does make things more flexible, and it possibly, and it will definitely reduce costs, I think, as well. So I think there is a lot of scope when it comes to the actual cross-border payments by the MTOs. Yeah.
Excellent. Thank you guys for that input there. I'm going to go on to our final question, and our final question is for everyone. So what do the different industry stakeholders need to do to increase financial inclusion? So again, that will be the regulators or the banks or the other service providers in between. What do the different industry stakeholders need to do to increase financial inclusion? And that's for anyone to start, guys.
Okay, I'll have a stab if that's okay with everyone else, and we can go from there. I mean, I think it's such a broad question. You probably need another webinar just on this, to be honest, Osama. But as you've asked the question, I mean, I think, you look at the different stakeholders. I'd start probably with governments and say actually governments can play a leading role in actually making their own payments and all their transactions digital in the first place, and in basically ensuring that their citizens are able to open a bank account to receive government payments. You see in many countries it's still very manual processes, not account-based, still cash-based, for all of those things. So lead by example, I'd say, would be one thing. I think the regulators, in a way, a lot of this is about having a risk-based approach to KYC, which we heard Arif mention earlier with eKYC, but in a whole series of areas, there needs to be work around actually making it easier for people to open accounts or reducing the incentive that currently exists for banks in not opening accounts for people. Then you've got the whole area around financial literacy and education. That's a massive barrier, and that really needs to be government driven in the first place, and then private sector operators can participate. And then I think if we look at, let's say, the remittance industry in its probably narrower form, actually the remittance companies themselves probably have an opportunity to offer a broader array of financial services, not just moving money from A to B, but actually much more around using the fact that somebody's transferring the money to offer a broader range of financial services. And in doing that, that will ensure that the people who are receiving, in particular, are part of the financial system. So there's a lot, that's probably 2 minutes on it. But as I said, there's a lot more involved, but I think everybody has a part to play. But a lot of it in the first place has to come from governments driving policy in this area to make a conscious effort to ensure that their citizens have access to financial services, or in the case of remittances, actually not even their citizens, that migrants who are in their country can actually get access. We know there's many countries where migrants are not allowed to open bank accounts, or they're not formalized, so they can't access anything formally, but they're actually playing a very useful function. So a lot. I know it's a bit broad brush and general, so hopefully the rest of the panel can help me out and provide some more specific answers. But that's how I'd sort of see the bigger picture anyway.
Yeah, absolutely, and very, very valid points, and very interesting valid points there. Thank you for that, Leon.
Yeah, and I've got very little to add to what Leon said, except that what we've seen in the pandemic or during the pandemic is sort of two kinds of regulators. The regulators who see an opportunity to rapidly increase financial inclusion. So we're talking about markets like Ghana, Kenya, Tanzania, where they've done an increase in mobile wallet limits and transaction limits, but they've also maybe done away with certain fees and negotiated that with the private sector. And that is to obviously rapidly take the opportunity to increase financial inclusion. And then on the other side, we've seen regulators where the intention might be good, but the way they execute in certain markets to just shut down the remittance market, because they're trying to figure out, or there's something which there was a gap in understanding, or they're trying to figure out grey routes. In that case, they've completely taken the compliant and the non-compliant players, shut them all down, had a huge impact on people's daily lives, and within a second, everything just stops flowing into their country. Again, that they might have had the right intention, but the execution wasn't correct. So that's what we've seen. Just maybe not talking about a solution here, rather talking about what we've seen in the last year and a half, going on 2 years.
And does it really stop all the funds from flowing cross border? I mean, or does it go underground and it's used for other sort of untoward things when now you don't have a view on it?
Exactly, very good point, Osama. And then I think you've nailed it. Is that you get these informal transactions that start happening, which the central banks hate because they don't have visibility, they can't report that, and that's the first thing. The second thing that happens is that all of a sudden in many markets you see there's a parallel market or FX market that starts rising up, because there's opportunists out there. There's guys who are sitting in these I would say sender markets, who are seeing people come to them desperate, and they take advantage of that. So yeah, thanks for bringing that up. It's a good point.
And maybe just, Martin, to add to you, a third category to the two that you mentioned are those who don't even have the intention of providing financial inclusion, right? So, there are these diehard capitalists and those who they don't even see that as a goal in itself. So there's that element of trying to make people understand the importance of these facilities for ordinary people.
Yeah.
So not only financial inclusions for the end users. What about the MTOs? I mean, what can the banks do to make it easier for them to operate? I mean, we're abiding by their laws. We have our licenses up to PAC to whatever standard. But again, and I think that was one of the questions on the side there. But again, MTOs are finding it hard to find banking partners, and hard to, particularly in the cash, it's just a big no-no at the moment. In the industry, of course, it's a little bit easier to find a partner that will collect digital payments via wire transfers or debit or credit card. And again, we've seen things pushing towards that direction. What can the banks do? How can we assist ourselves again with having those the essential part of remittance in this, with that client account to receive the funds into?
Mm-hmm. So I wanted to just touch on Arif's point where he said, there are those who are not invested in the financial inclusion concept. And that's really important, right? Because there are those capitalists out there that are operating in a closed system. When you operate in a closed system, you think, I've got the closed system, I've got all the customers end to end, I've got, everybody from the sender to the receiver, and that's it. I'm not going to let anybody else in. But in fact, you're hurting yourself long term because you're not opening it up to bigger ecosystem, bringing in more players, bringing in more volume, eventually bringing in more numbers. So I think people need to just change it's like a paradigm shift, right? They have to change the behavior, have to change the thinking. So Arif, I love that point. I think, Osama, to your question about what banks can do, and how, this whole concept of cash with MTOs, what can be done about that? I think we have to sit up and take notice of some of the companies who are doing reg tech. There are a lot of tech companies out there who are looking into regulation, looking into KYC, looking into compliance. And, some of them are focused on AML, some of them are focused on other parts of compliance. But altogether, they're really trying to figure out how they can make KYC, AML better, more secure, less fraud, more scalable. So I think banks need to take a look at some of these companies and what these tech companies are doing. And of course, there are going to be gaps. No one's saying it's a perfect world out there, but address those gaps, work together. How can we sort of bring the new age tech firms who are doing some really groundbreaking disruptive work to make things scalable, easier, more inclusive? And how do we bring the banks with their institutional knowledge and combine that together to create a greater ecosystem? Of course, it sounds all nice when I'm saying it up here, but I think there are certain actions that can be taken from both sides to make this work.
Absolutely. Thank you so much for that input.
Just quickly, also, Osama, I think one thing that I've seen in other industries is, self-regulation is probably not the word, but the ability to lobby the banks, and to your point, Suki, and to your point, Arif, it's kind of up to us as the industry to lobby these banks, to tell them about the pain points we're experiencing, and to help them to move to support us on that journey that we're on. And I think, if you look at buy now, pay later as a market, whereby essentially they were under the radar for a long period of time, they're now going to have to be regulated. They've been lobbying for a long time, not just bank and infrastructure, but also the regulatory authorities to understand what does good look like, and how do we make it happen so that we can secure our own industry, and we can stop these capitalists who are out there who are, who are typically, the minority, ruining it for the majority, essentially.
I think that's a really good point, Luke. And the analogy is good. The only thing I'd say is that having seen de-risking in all its ugly forms for the last 12 or 13 years, and periodically governments starting to get interested in trying to help remittance companies, it ultimately, to my mind, the difference with, say, buy now, pay later and remittances is that remittances automatically involves at least 2 jurisdictions, whereas the BNPL is really a one jurisdiction area. So government could decide, yes, we like it, we'll work with people to introduce it. When you start getting remittances to places that a lot of governments are not even familiar with, and they just see risk after risk after risk, you're exactly right. We need to liaise and so on. To be fair, the industry has been liaising with government since it first raised its head. What it really needs is for governments and international bodies to actually take some decisions and force in some cases, force may not be the right word, let's say encourage strenuously banks to actually open accounts. You look, even within the EU under the last Payment Services Directive, there were steps put in place to make sure that it was really difficult for banks to close money transfer operators' accounts or to put a reason why they couldn't open them. And today, apart from Spain, there's virtually nowhere that's actually successfully tackled this area. So I'm not dissing your answer at all. I think it's exactly the right answer, but we need a lot of weight. Really, we need a lot of support across from the industry, but we need government champions and we need to find some friendly banks, which is at the moment proving almost impossible. So hopefully we can find a solution. I'm forever optimistic, but it's not that easy at the moment.
I fully appreciate the pain, and yeah, I'm supportive of the journey you're on, and happy to help where I can.
Perfect, great. Okay, we'll add you to the list. Perfect.
Fantastic. Thank you so much for your input, guys. We've got sort of 10 minutes left or so, and I know we've answered some of the questions from the question and answer on the right hand side, or the chat on the right hand side. So we'll try to get through a couple more of those, hopefully, as we wrap up the session. So my first one's from Bombay Store. We are an e-commerce company in Israel that work mainly with expats and are an agent to a local company. How do we scale up and offer services as a money remittance service? Okay, Bombay Store. So to really answer that question, we need to sort of dig a little bit deeper and understand. So you mentioned things like expats and certain corridors. But we need to understand who your client is, first of all, and how you want to operate. So in one sense, we can look at it's the expats that are living in France or that UK, and again, are sending back to Israel. And if you want to target them as your initial client, then you would need to go to the countries of France and UK, obtain a license, and then offer services to the expats living there. Again, so sending money back to Israel. The other side of it, the flip side of it, you might be licensed in Israel, have a payout network in Israel, again, be licensed by the company, and then you act as a payout network. So all you're doing is receiving payment instructions from third parties who might be licensed themselves from the UK or from France or from Canada, from the US, again, sending you payment instructions, and then you would then disperse that locally. And so really depends on how you want to operate, the type of operation that you want to run, and then start looking at the requirements. I think that's always the first step as well. See the requirements of the area that you want to operate in, looking to fulfill those requirements, whether it be on the tech side, in terms of the expected things from you, like they might expect you to be checking certain sanctions lists every time someone makes a payment, like the OFAC or HM Treasury or DFAC or something of that nature. So again, you would need to tick all those boxes, make sure that you're working with the right AML officers, and again, applying for those correct licenses that you need in those areas where you would like to operate. And again, so what we're saying is let's just say the FCA is like example, the regulatory of the UK. What we're saying to them is, here's information about myself, fit and proper testing, information about my AML officer that we're going to be using to check these payments. Here's information about my software, how secure it is in terms of data security, data protection, infrastructure, server infrastructure, disaster recovery, so on and so forth. So we're providing all this information for them to be comfortable and say, okay, that's fantastic. Here's a license. You can now operate, and you can take this information and take the of the citizen. So you'll be collecting sensitive information like IDs and checking IDs and things like that. But of course, then offering them a service by taking their money. It's a money service business. We can't forget as well, look, unlike many other businesses like grocery stores and things like that, remittance in itself is probably the highest risk sector when we're talking about money laundering and terrorism financing. There is sort of no other. If people want to launder money, they go through FX or they go through remittances or something of that nature. Below that is luxury goods. So we're looked at with a magnifying glass. So it's part of the reason why of de-risking. Again, it is a really, really high risk sector. And then particularly look at some of the corridors that we talk about, right? So just be well aware of that. It's a very different beast. It's a minefield. Make sure you are working with the right partners that understand the different aspects. So that would be my your first point really to understand what type of business and what your requirements are, and go from there. Does anyone else sort of have anything to add to that? No, okay. Should we go on to, I think there's another question in the chat. We have seen fintech companies taking over the typical MTO's business in the post-pandemic times. Now fintech companies are being threatened by CBDC, tech giants like Apple, Google, and mobile service providers. So what's your view on the future of typical remittance businesses in the next 5 years' time? Interesting question. I'm not sure if I agree with that 100% either. Would anyone like to jump into that? I mean, from what we've seen, I've seen lots of smaller MSBs turning up and really sort of challenging those bigger tech companies. Does anyone have any other opinions?
Yes, great question. It's a really good question. I'm not quite sure how to answer it in a sense, except that I suspect that some of it comes back, and actually the previous question as well. There's now a lot of companies providing white labeled or aggregator type of services. So I think we probably have to distinguish between those who are customer facing, who will have their own operations to get to the customer, and those who are providing services to those businesses. And I suspect that a lot of the businesses we're seeing now might move actually from the customer facing side to supporting some of these other big businesses that we're talking about, or white labeling. I mean, we're already seeing it with, the likes of Western Union, MoneyGram, RIA, and so on, really outsourcing their physical distribution network, which was something that 5 years ago would have been unthinkable for them, to now actually saying, this is an asset we have, how can we maximize the value of that? And then basically offering access to that to other entities. We're seeing companies providing back office settlement service. We're seeing companies providing access to bank accounts, all of those things. I think it's undoubtedly some of these large global companies will probably look at this and say, do our customers want to use these types of services? If so, how do we get it? Do we build it ourselves, or do we basically rent it from someone else? So I suspect that some of the traditional companies are going to reinvent themselves, not so much as customer facing, but actually as supporting other businesses that actually have very big customer bases. I don't know, could be completely wrong, but that would be something to start the discussion going anyway.
Fantastic. Okay, I'll move on to a question by Gayat. From your experience, what is the cost trend for digital payment processes? Are we going up because we have more regulatory stuff and more obstacles in our way, or is it becoming cheaper because it's all done through simple APIs nowadays and there's not much manual intervention? The costs are going down.
I think that's a question for Luke.
For me, isn't it? Yeah. I think it depends where you're operating, but I think if we talk to the UK in particular, the trends are definitely going down, to a certain extent, depending on what type of payment method you're talking to. So if you look at traditional payment methods that are becoming digital through the likes of wallets and such forth, debit cards, credit cards, you've still got scheme fees and interchange that are associated with those payment methods. And as you would have seen recently, Visa and MasterCard are continuing to increase scheme fees. So the BRC, British Retail Consortium, did a report actually fairly recently that said that scheme fees have increased nigh on 60% in the last 4 years. So although interchange is going down, scheme fees are going up, which essentially means that digital payments based on traditional payment schemes like Visa and MasterCard are still pretty expensive. But there are a number of other alternatives. I mentioned open banking. There's a whole host of other sort of cryptocurrency and blockchain payment methods and mechanisms that are coming to fruition that are going to essentially do a few things. And it actually talks to Melvin's point earlier. I think he talks around, fraud associated with some of those traditional payment methods too. So it's not just the processing of those transactions, it's also the costs associated to taking those payments. whether it be a manual bank transfer where you're having to do manual bank reconciliation and have people in your finance team reconcile that transaction data on a day-to-day basis and an hourly basis to make sure that you've got the funds before you ship the funds out. It's the fraud related to, you know, people abusing card transactions and stealing card information and compromising that card information, and then utilizing that card to then send monies abroad. You know, all of this creates cost to a business, essentially. And I think some of the digital payment schemes that are coming to fruition, especially open banking, which is obviously my expertise, you know, definitely alleviate these types of risks. So, you know, with the fact that you use biometric authentication methods that are associated to your bank, you're essentially able to cannibalize that debit card traffic to you know, essentially an online bank transfer mechanism, which means you negate fraud, means you get the monies instantly. So Suki's point earlier in terms of working capital, there's no need to go and have to get credit because you're getting settled the money within seconds. And also, if you think about the consumer journey, you know, most people have got a bank account these days. Not everybody's got a debit card. The debit card might be in my wallet, for example. I've got to get my debit card out, put my 16-digit PAN number, expiry date, CV2, go through two-factor authentication. That's all friction. It's preventing me from executing a transaction. So there's a number of costs associated to digital payments. And I think, you know, new technology, new payment methods like open banking and Vine are definitely helping to navigate the new digital world we're operating in, and making it easier for consumers and MTOs and agents to basically service their consumers in the digital world that we live in.
Absolutely, Luke, and thank you so much for that information input there. We've come to the end of our webinar, so thank you very much to everyone for attending today's webinar. We hope you found the session useful, and a big thank you to all our panelists. It's been an absolute pleasure having each and every one of you here, and we had some great topics and good information coming through. So very, very interesting stuff. Thank you so much. We'll be providing a written summary and a video upload of today's webinar in our next newsletter, so keep an eye out for that. And as we mentioned earlier, if you'd like to read the IPR report, which features findings from survey data, industry expert opinion, and internal RemitONE data, please follow the link on the screen. If you'd like to continue on the conversation we've had today with RemitONE or any of our panelists, please get in touch with marketing@remitone.com. marketing@remitone.com. And finally, a huge thanks again to everyone for joining and please enjoy the rest of your day. Take care, guys. Bye-bye.
Sama, team, thank you very much for having me.
Thanks a lot. Bye.
Thanks.
Speak soon.
Bye-bye.
Have a good afternoon.
Take care, everyone. Bye-bye.